Okay, so we're going to get started with this morning's session, which is the stock costing side of Sage 200. And we're logged into Sage 200 already. I just want to explain some of the setup and what I've done in preparation for this morning's webinar. So first of all, I've created a number of product groups. So in stock maintenance and product groups, we have a number of product groups. We've got actual, we have FIFO, average and standard, and I'm using those as my example for this morning for all the different costing methods that are available. So let's have a little look at all of them. So first of all, there's our actual costed product group. I mean, a product group can be called anything. I've just called it that just so it's so quite clear as to what we're actually working with. So within the product group settings, we have a number of costing methods available to us. This one, as I say, is using the actual costing method, and you can only use that if you actually use batch numbers or serial numbers within your stock control. If that's not ticked on, then that costing method is not visible to you, and you'd have to use one of the other three costing methods. We also have an average costing product group. And again, if I just show you this, so we've selected average costing. Because we're not using batch or serial numbers, this is clarifying what I just mentioned. We don't have visibility of that actual costing method. I've also set up a FIFO costed product group. So again, our costing method is FIFO, no batch or serial numbers are applicable, so no visibility of the actual costing method. And finally, I've set up a product group that's called standard, and that's using our standard costing method. I've also created 4 brand new stock codes, just labelled 1, 2, 3 and 4, and just named standard costing, average costed, FIFO and actual costed. So let's have a little look at these stock items. So first of all, our standard costed item, we have here a field that says standard cost price, and this is a manually input field. Standard cost is usually slightly higher than your buying price, and it's used to account for any sort of delivery costs, admin costs, just to inflate the value of your stock within your balance sheet. I've costed this at £15 per unit. If we look at our average costed item, we don't have that standard cost field available to us. We have another one instead that's called average buying price. Now that can be overtyped, perhaps in the first instance when you're creating a new stock code, but that's automatically calculated as you purchase and add stock and remove stock. That will be calculated automatically for you. Okay, so that's our average costed item. Our FIFO costed item also has just the average buying price visible to you, and the average buying price will be calculated for your FIFO costed stock codes. And then finally we have our actual costed item, which I'll again go to amend details. We've got the costing method there is set to actual, and again an average buying price will be calculated, but it's the actual cost of each batch or serial number that will be used for our costing purposes. Okay, now the first thing I'm going to do is raise a purchase order for all of those items. So within purchase order processing, I'm just going to create a new purchase order from a supplier. So I'm going to use, I'll use Atlas Ranges. And I'm going to add my stock items. So I want to purchase code number 1, my standard costed item. I want to purchase a quantity of 1, and the price that I'm going to pay is £11. If you notice that the default price was my standard costed price, but I'm actually going to purchase this from the supplier at a cost of £11. I'm also going to purchase stock item code number 2, again just one of those at a cost of £11. I'm going to purchase stock code number 3, just one of those at a cost of £11. And finally, I'm going to purchase stock code number 4, just one of those, again at a cost of £11. So we're purchasing all of those items at exactly the same cost from the same supplier. Okay. So I'm saving my purchase order. It's generating a purchase order number for me, which I can now process. So in order processing, I'm going to do a goods received, and I'm going to confirm that I've received those goods in from that supplier. So there's my Atlas ranges. That's my purchase order. Pop in a reference number. My demo date is actually in 2010, so I'm going to date everything 2010. Quantity received is going to be everything. Now, because the actual costed item is a batch numbered item, it's prompting me at this point for a batch number. That's purely in the settings, okay? It doesn't have to prompt you at the point you receive the goods. It can go to an unassigned batch number and waiting to be assigned when you book the goods in, when you assign the batch number at a future date. But for purposes of today's demonstration, I'm going to give it a batch number 1, and it's just a quantity of 1. Okay, so we've received our goods into stock, and I'm now going to receive the invoice and match the invoice against that purchase order. So again, for that particular supplier, for the selected order, my invoice date, again, I'm going to make 2010 just for demonstration purposes with an invoice number of 1. Okie dokie, and I'm going to match each of those lines against the goods received, so standard purchase order processing. So each of my items, my standard costed item, my average FIFO and actual costed items have all been ordered, received and invoiced. And close. I didn't untick the authorization, not a problem. Okie dokie. So let's have a little look now at our stock valuation. So in stock control, in my reports, I'm just going to run the stock valuation report for those 4 items. Okie dokie. So we can see that our actual costed item is valued at £11. That was the actual cost that we received when we had the invoice against that item. Our average costed item is also £11 because we only have the 1 item booked in, so we paid £11 for it. Our FIFO costed item is also valued at £11. It's the only item, so it's the first in item, so it's valued at the £11. But our standard costed item has a value of £15. If you remember on that stock item screen, we typed in that the standard cost for this item was £15. So let's close that and now have a little look at the nominal postings that were generated from that purchase order. So if I go to the nominal ledger and I go to current waiting postings, okie dokie. Right, it's going to unauthorized purchases because I did make a mistake and I didn't untick the unauthorized, but that would actually go to stock control. Let me just authorize that purchase invoice. So in the purchase ledger and transactions, authorization for that supplier, and 2010, authorize that. Nominal analysis and okie dokie. Brilliant. So let's just refresh our nominal list. Perfect. Okie dokes. So what we now have is the value of £44 that's going to go to our nominal ledger for the stock on the balance sheet. However, if you remember, our total valuation for stock is actually 48 when we run the stock valuation report. We had the 3 items that were valued at £11 each, and we had the standard costed item that was valued at £15 each. So at this exact moment in time, our nominal ledger does not agree to the stock valuation. There is a utility run within purchase order processing, and purchase order process maintenance, and this is called the standard cost variances. Now if we run this, what Sage is going to do is going to look at the purchase cost of our stock items compared to the standard cost of those items, and it's going to make an associated adjustment. So if I just look at that particular code, you can see here that it's got the variance of £4. That's the difference between our purchase price of £11 and our standard cost of £15. So this is a utility that needs to be run at least on a monthly basis in order to put your standard costed items in sync with your nominal ledger. We just select Reset Variances. We just enter a date for the nominal posting and say OK to that. So now if I refresh my screen again, you can see here that we've got a £44 debit going to our stock on the nominal ledger, which has been generated from our purchase invoice. But we now have a further £4 debit that's going to be posted to stock on the nominal ledger, which is our standard cost variance. So we're now in sync. Our nominal ledger agrees to stock control. So I'm just going to update those postings so we can start afresh with the next session and have a little look at what happens now when we add stock just manually through stock control. Okay, so within stock control, do I go back to my stock list? What I want to be doing is an adjustment, and I'm going to just add stock. I'm going to add one each of those stock items. But this time I'm going to pop in a different cost. Now this process is exactly the same as if we had been entering a purchase order, but I just want to show you that it doesn't matter where you add your stock, whether you're receiving the goods in through POP or whether you're adding them through stock control, the net effect is the same. So first of all, my standard costed item, I'm going to book in a quantity of 1, and it's defaulted to my standard cost, but it is possible to change that cost value when you're adding stock through stock control. So again, just change the date of that and then save that transaction. Stock item code number 2, our average cost. So again, it's a quantity of 1 that I'm booking in, still at a cost of £12. So again, each of these I'm going to book in at a different cost to the average cost that is currently held within the system. Save that. Stock code number 3 is our FIFO costed method item. One of those at a cost of £12. And again, just date that back to 2010 just for my demo data. And finally, our actual costed item. Again, I'm going to book in one of those at a cost of £12. Oopsie. Let's open that window. And if you notice this time, the Save button has changed on this screen. It now reads Proceed, and that's because this is a batch numbered item. So when I select the Proceed button, it's going to prompt me for the batch number that I'm checking in. So I'm going to say this is batch number 2, and again, it's for the 1 quantity that I'm adding into stock. I just refresh this screen. You can see now that we've got 2 actual quantities of all of our stock items. The average buying price for all of the stock items is exactly the same. We've booked one in at £11 and we've booked one in at £12, but we have a standard cost against our standard costed item. Let's run our stock valuation again. So the stock valuation for those 4 items and OK. So we've got the quantity of 2 in for each of those items. The actual costed item is £23. The average is 23, the FIFO is 23, but our standard costed item is actually saying £30. Even though I've booked one item in at £11, one item in at £12, I've made the adjustment for the standard cost variance for the £4. So again, when it comes to our standard costed item, we are still going to have a difference between the nominal ledger and our stock control valuation because we haven't run that stock standard cost variance routine. So if we have a little look now at the total of our stock valuation, it's £99 according to stock control. Let's have a little look at our nominal postings again. Okay, so this is all the goods being added into stock, and what you can see is it's debiting stock control with the value of the addition, and it's crediting the cost of sales. Now, it doesn't have to be cost of sales. This nominal code is picked up on the item itself, and I'll show you that in just a moment. But what we can see is that we're going to be adding a total of £48 to our nominal ledger, to the stock valuation in the nominal ledger, even though our standard costed item should be £15. So once again, as part of that month-end routine in purchase order processing, standard cost variance, okay, it will pick up that variance even though we didn't book it in via purchase order processing. That routine will pick up any stock standard costed transactions that need to be adjusted and process them all at the same time. So again, if I just reset my variance and say OK to that and refresh my list, you can see that there's that £3 adjustment for the standard cost variance that we just manually added the stock via stock control, nothing to do with purchase order processing. So once again, I'm just going to update those postings. So we start with a clean sheet before we start looking at sort of reducing our stock levels. Okay, so let's go back to our stock list. Now what I wanted to show you was if I go to amend details, as we noticed that there was that debit to the stock on the balance sheet account and there was the credit to that cost of sales account. And those accounts are picked up from the analysis tab on our stock item. So here we have the nominal code on the balance sheet for our stock to be posted to. And here we have, they call it an issues account. It can be posted anywhere on your P&L for the issue or the cost of sale of those particular items, or that particular item. You can have different nominal codes if you want to for every stock item. I wouldn't recommend that. It tends to be on a product group by product group basis, or just one stock item nominal code as a whole. Okay, so the first thing I want to do to reduce the stock quantities is just a manual adjustment, again through stock control. And what I'm going to do is I'm going to write off some stock. I'm going to write off just one of those items for each of them. So again, our standard costed item. Okay, I select a write-off category, select the quantity that I want to write off, enter the date of the transaction and any references I want to be associated with that. Same is true for our average costed item. We just select the write-off category, we select the quantity that we want to write off, enter the transaction date and any associated references. Our FIFO costed item, just select the reason we're writing the stock off and the quantity, date and any references. And then finally, for our actual costed item, we select the write-off category, the quantity, the date, any references, but again that save button has changed now. It reads proceed, which when I select that, it'll ask me which batch number I'm wanting to write off. So I'm going to select batch number 2 and enter the quantity, and that's the batch number that I'm going to write off or reduce my stock by that batch. Okay, so we have done exactly the same transactions for all of our stock items. However, I'm now going to run the stock valuation for those stock items. And what we see now is that each of those items has a different value within the stock valuation in stock control. Our actual costed item is telling us that we've got one in stock at a value of £11. Now that was the first item that we purchased. That was my purchase cost on the purchase order. When I selected the batch that I wanted to write off, I selected the latest batch. So it wrote off the actual value of the £12, which was my actual cost for batch number 2. So the value of the stock I now have is £11. For my average stock, it has given me a value of £11.50. I purchased one item at £11. I purchased one item at £12, so I had 2 items in valuing £23, and hence the average cost is £11.50 per unit. And that's constantly being updated as you buy and issue out your stock quantities. Our FIFO costed item is giving us a value of £12. We purchased the first item at £11 and the second item at £12. So when we wrote off one item, it automatically took the oldest item, which is our £11 valued item, and it wrote that off, meaning that I've now got the one left in stock valued at £12, the latest cost. And then finally, we have our standard costed item, telling us we have the one in stock, and it's got a value of £15. So we're starting to build up a picture now of how the different costing methods will actually be reflected in your stock valuation. So all of those items had exactly the same transactions processed, but they're all giving us individual and different stock values. Let's go back to our nominal postings and see what's happening in there. So if I go to my current waiting postings, we see now that we've got all of those transactions waiting to be posted, all with different values. So we have a credit of £15 for our standard costed item. We have £11.50 for our average costed item. We have £11 for our FIFO item, and we have £12 adjustment for our actual costed item. If you notice that the debit value is actually going to the stock write-offs nominal code. Now that's picked up on each individual write-off reason that you can set up within stock control. So first of all, I'm just going to update the postings so we clear those down, and then I'll show you where those write-off nominal codes are picked up from. So within stock control, within settings, utilities, system setup, and stock control settings, we have a tab there that's called write-off categories, and against each category we define the nominal code that we want that transaction to be posted to. So by default, when we write off any stock, it's going to credit the stock on the balance sheet that it's picking up from the specific item, and it's picking up the debit to go to our write-offs, which is picked up from our write-off screen. Oh, it's not letting me select that. Right, sorry about this, I seem to have got jammed up for some reason. It doesn't allow me to do anything. Write-off code, there we go. So if I just say OK to that. So within stock control settings, our write-off categories, we define the nominal code that we want the opposite transaction to be posted to when we credit our stock control account. Okay, so finally what I want to show is what happens to create a cost of sale posting when we actually sell those sales orders, sell those stock items through sales order processing. So in sales order processing, I'm actually going to create a new sales order for those items. I'm going to create a new order. I'm going to select my customer account. I'll do Better Kitchens, and I'm going to add the items that I want to sell. So I'm going to sell my standard costed item. I'm going to sell one of those at a value of £30. I'm selling my average costed item at a value of £30. I'm selling my FIFO costed item at a value of £30. And I'm selling my actual costed item also at a value of £30. Okay. So again, we're selling all of those items at exactly the same rate, and we're going to see the effect on the profits then of those particular items in just a moment. Okay, so let's save that. And I'm going to process this sales order. So we've generated a sales order number. I'm just going to print my acknowledgements. I'm going to dispatch those goods out. So order processing, goods dispatched, and confirm goods dispatched. Just going to select my purchase order. And I'm just going to make that in line with my accounting period. I'm going to print the invoice out associated with that sales order. There we go. And finally, I'm just going to post that invoice through to the sales ledger. So in order processing, post invoices, let's do everything. And close that. Okie dokes. So first of all, let's go up to stock control. And again, have a look at the stock list. And if I just refresh my list, you can see now we have nothing left in stock of any of those particular items. Hence, if I were to do my stock valuation, there's nothing left. It would show a 0 value. Let's have a little look at the nominal postings that have been generated from that sales order process. And what we can see is that it's credit in stock with the value associated with the costing method for that item. So we've got our standard costed item is being credited with the £15, average costed item credited with the £11.50. We've got our FIFO item being credited with £12, and we've got our batch serial numbered item being credited with the £11. That's automatically been generated as the cost of sale for that particular order. And the debit part of that posting is being posted to our cost of sales. It's picking up exactly the same nominal code on the stock item that we saw when we did the write-off of the stock. So the last nominal code on the analysis tab on the stock item is our cost of sales posting. So I'm just going to update those and say OK to that. But what I also want to do is look at the profitability of that particular sales order. So I'm going to go back to sales order processing. Just going to call up that particular order. And I'm going to view the details. So for our standard costed item, I'll just move this up a little bit so I can get to the bottom. If I go to the profit, it's telling me that I've got a realised profit of £15. The standard cost for that item was £15. We sold it for £30, and hence we've made a profit of £15. Our average costed item, if I just view that, and again go to the profit, okay, we've got a realised profit of £18.50. So we bought, the average cost is £11.50. We sold it for £30, and hence we've made a profit of £18.50. If we look at our FIFO costed item, and look at the profit there. The cost for that FIFO item was £12. We still sold it for £30, and hence we've made a profit of £18 on our FIFO item. And then finally, our actual costed item, looking at the profit there, again, we purchased it for, the cost was £11, we've sold it for £30, and hence we've made a profit of £19. So you can see the effect now feeding right the way through to the sales orders and the profitability on your sales orders, depending on the costing method that you're choosing to use for your stock items. The final thing I just want to point out is that you can see here we have two profit analysis options. There's the estimated unit cost and the realized unit cost and profit. When we first raise a sales order for an item, if the cost has not been completely updated for that stock item, it will immediately put in an estimated unit cost. The estimated cost is always going to be the average costing, regardless of whichever costing method you're using. So here, for example, we're looking at our actual costed item, but it's saying the estimated unit cost was £11.50, even though the actual cost was £11. So the way Sage will work when we put a sales order on is it'll look at the average cost and it'll make an estimate for the profitability for that sales order line. When that sales order is complete, it will then look at the actual cost for that batch item, or it will look at the FIFO cost, and it will then say, right, this is my realized units cost and my realized profit, and it's at that point it makes the cost of sale posting. Now let's suppose we hadn't received the invoice for our actual costed item or for our FIFO item or for any of them. It is going to make the cost of sale posting initially for the estimated unit cost, and then when we record the purchase invoice for the items, it will do a catch-up cost of sale posting for the difference between the estimated cost and the realized unit cost. So it's always going to be an accurate, up-to-date costing figure within the nominal ledger, but there may well be timing differences between the actual sales process and the time you book in the actual cost for your stock items. And that, ladies and gentlemen, really is your different costing methods available to you within stock control. So let's have a quick little review. So we had a little look at the product groups and the different costing methods that are available to you: standard, average, FIFO, and actual. We had a little look at the item numbers that we created, and we created 4 different item numbers. One was standard costed, in which we manually entered the standard cost. We created an average, FIFO, and actual costed item. So there was nothing manually entered with regard to the costing on those items. We raised a purchase order for all of those items, all by being bought in at the same costs. They were all brought in at a quantity of 1 at £11. When we looked at our stock valuation, we could see, however, that there was a difference between the stock valuation and the nominal postings for our standard costed item. And we had to run the standard cost variance routine to make a catch-up posting within the nominal ledger for the difference between the buying price and the standard cost of that item. That same option needs to be run even if you manually add stock within stock control, but you type in a different cost to the standard cost that's being processed or the setup within the stock item. We then had a little look at writing off stock, and we manually wrote off each of those items, and we were left then with a different stock valuation for each of those items. So our standard item was costed at £15, average was £11.50, FIFO was £12, actual cost was £11, even though the transactions we'd processed had been identical for all 4 items. And then finally we raised a sales order and processed that through the sales order process, bringing our stock levels down to 0, but there were different nominal postings that were generated for all of the cost of sales postings for those items. And the profitability on those sales order lines was different depending on what the costing method was for each of those items as well. So I hope that's clarified what's available to you, how those costing methods differ, how they're processed, and how they reflect not only in your stock valuation but also in the nominal valuation as well on your balance sheet and your profitability. So thank you so much for your time. as I say, if you have any questions, then please just enter those questions on the questions tab and I will get back to you individually at the end of the session. So next month we're going to be looking at sales order processing. No, we're going to look at purchase order processing next month. Do apologise. Just some of the functionality that's available to you within that module. So hopefully you can join us then and I look forward to seeing you then. Thank you and goodbye.